What's up, everyone? It's Eric from Option Edge, and today I want to talk about the best stock to run the wheel strategy or covered calls on. Let's get into it. What's up, everyone? It's Eric from Option Edge again, and today we're going to talk about the best stocks for running the wheel strategy on or just running a covered call strategy on. Let's get into it. So here is the list of criteria for the stocks that you want to run this strategy on, okay? The most important one is you want to pick a stock that you want to own long term. When you're running the wheel strategy, you're going to be holding stock at some point, okay? And then the next criterion is you want a stock with a decent volatility. And the reason why, when you go to sell puts and calls options, you're going to get paid for that volatility with juicier premium, juicier credits, so you'll be making more money, okay? But on the other hand, you want a stock that isn't too volatile, and the main reason for that is, I know from experience, when you are short a call, let's say you're selling a $60 call on a $50 stock. If the stock is super volatile, it can pierce through your $60 strike, go to $80, and then you are forced to sell those 100 shares at a much lower strike price than the current stock price, okay? And that's sort of how you make less money than you'd like, okay? Then two of the most important criteria are you want a stock with weekly options and you want a stock with $1 strikes in their options chain. And the reason for this is when you go to roll these options, which is what you're going to need to do at some point to keep the dream alive, so to speak, you're going to want stocks that meet these criteria, okay? And then here's a bonus. If you use a stock that's less than $100, it doesn't eat up your buying power quite as much. So that's a positive. And then another super bonus is using a stock that has a dividend. So you're not only getting paid with the options contracts you're selling, you're not only getting paid with that credit or that premium you're selling, you're also receiving a dividend. I'm not going to go into that in this video though. And that's really it. It sounds simple, but it's not so easy to find good stocks that meet all those criteria points. So let me just go to Robinhood to explain more about some of the things I just said. All right, we're in Robinhood and we're in the Nike options chain for February 17th. So two of the criteria I talked about was we want to pick a stock that has dollar wide strikes. So you can see 123, 124, 125, 126. This meets the criteria for that. And then the next thing we want is we want weekly options, okay? We don't want monthly, we want weekly. And the main reason why is because when we're selling a call, let's say we're selling the 125 call, and let's say this $122 stock pierces up through our 125 strike and gets just above 125 but below 126. So in that situation, I'm going to want to roll out in time and up a strike. So we're going to want to roll to, let's say, the 126, okay, strike. But we're going to want to roll out in time. So currently, the 125 Feb 217 is worth $1.06. We're going to want to roll up to the 125. That expires a week later. We're getting about 20 cents more of credit. So you always want to roll for a credit. Obviously, though, when the stock rate rises, these calls are going to be worth more. So it might not be that easy to just roll one strike and 1 week ahead. You might have to do a couple weeks to a month or even longer than a month, and you're only going to be able to roll up one strike, okay? So Nike in many ways fits that criteria. Is it a stock that you want to buy and hold for a long period of time? That's up to you. Another strong stock we can talk about is Google. So Google has the dollar wide strikes, okay? So that fits that criteria. And then we have weekly options. So that's what we want to see. And Nike and Google have good volatility, okay? And then another stock you might be interested is in SPY. And SPY is great because it's a stock you're going to want to hold long term, and there's dollar wide strikes. But if we look at the expiration cycles now, in the last couple months, SPY expires every single day, which is amazing. So you are very flexible using this strategy. So with SPY. So I'm in the Stock Elastics option chain, and here's an example of a stock you don't want to run the wheel strategy on, okay? So the main reason right off the bat is you can see that these strikes are $5 wide, and on top of that, we have monthly expiries instead of weeklies. So this makes it very hard. Let's say if we were to try and sell the 65 call, sell the 65 call. The stock price goes from about $60 to 65. It's going to make it very hard to roll the call because we're going to have to roll 5 strikes up. Okay, so odds are when we go to do that, when we roll out and up in time, the strike that's $5 ahead is going to be worth less than the current option you're selling. So you're not going to be able to roll out in time for a credit, okay? So that's the main reason why the strike width matters so much. So let me just show you these stocks, the volatilities of each stock. All right, we're in the Tasty Trade platform, and what's good about the Tasty Trade, I can see the implied volatility for each expiration cycle, and you can see that here down the line. So you can see that Nike, we're looking at Nike, has 34, has 30s and above volatility, so that's pretty good. If we compare that to SPY, let's check out SPY's volatility. Currently the volatility in the SPYs is low, a little bit low. The IVR is 17, so not that juicy. Let's look at Google. Google a little bit more volatility, so Google could be a very good candidate for running this strategy. But the stock I want to show you that I like currently, and you may argue this is too volatile, but I like the trade desk. Okay, so we got volatility in the hundreds, drops down over time to the 80s. Let's look at the current expiration. This stock not only has dollar wide strikes, it's got half strikes, so 50-cent wide strikes. And you can do a lot with those half dollar wide strikes in terms of rolling. And then we also have the weekly expiries, so we're very flexible here. So yeah, that's basically it. That's the criteria I like to follow. And the trade desk is probably one of my favorite stocks to do this in because one, I want to hold this stock long term. I think it has a lot of potential. That's my opinion, so that's not financial advice. It's got good liquidity, it's got good volatility, maybe a little too high, however. But that's basically it. So if you have any questions, concerns, please comment, let me know. Peace.